What's going on, everyone? Hootmoney here with another video. Today we're going to be talking about what could be a very low risk but potentially extremely high reward opportunity in the stock market. Now, this stock Ipof, which we are going to be talking about, is a special purpose acquisition company. It's currently sitting at $10.05 as of Friday's close, and that means that there is little to no downside in it. The most that this stock could really go back down is to the $9.50 net asset value before the company merges into whatever their merger target is. Well, there's reason to believe that Ipof will be merging with Starlink because of a lot of different due diligence that has been building up, as well as some news that has hit as of last Friday, which has sent the volume on this stock to go up a bunch. So we are going to be going over all of this in today's video. So if you don't mind dropping that like on the video, it's always highly appreciated. Subscribe to the channel if you are new. And let's get right into the juice. So a bit of backstory on Ipof. It's a special purpose acquisition company. It's a partnership between Chamath and social capital Heliosphia, forgive me if I'm saying this wrong, holdings. They've had recent special purpose acquisition companies IPOA, IPOB, IPOC, IPOD, IPOE, and IPOF, which is their last one that we'll click right here. Ipof may pursue an initial business combination target in any industry or geographic location, but Ipof intends to focus its search for a business operating in the technology industry. So recently on Friday, we got the news that chamath Palihapitiya, who took Virgin Galactic public, steps down from the space company's board. Palihapitiya said he is leaving to focus on other existing and upcoming board responsibilities. So this could include becoming a member of the board of whatever company merges with Ipof. So Virgin Galactic is a space tourism company that chamath Palihapitiya took public back in 2020. So with Chamath stepping down from the board of Virgin Galactic, this could be for multiple different reasons. But the rumor is that he's stepping down from Virgin Galactic to join the board of a competing company that will be merging with Ipof. Reddit user AccordingCar7903 makes an interesting case that Ipof would be merging with Starlink. This is because Chamath Social Capital, the company that is behind the special purpose acquisition company Ipof, also the largest shareholder of Swarm, which is a subsidiary of SpaceX, is estimated to have acquired a stake in SpaceX for about $1.15 billion through the merger agreement of Swarm and SpaceX. Now the speculation comes in because 1.15 billion is about the same size of Ipof. So that is why there's this rumor that Ipof may be merging with Starlink. I'd like to thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're doing a stock brokerage promotion where you deposit $1 on their brokerage, you get up to $7,000 in free stock. All you have to do to get this promotion, get up to $7,000 in free stock, is click the second link in the description or first link in the pinned comments section, make an account, and link your bank account, deposit $1. You can get up to $7,000 in free stock. So you can get a share of Apple, Amazon, Google. I've seen people get these before. You could also get an extra share of AMC if you deposit $100 on their platform. Honestly, I think just depositing one to get up to 7,000 is an absolutely phenomenal deal. Absolute no-brainer, especially in today's market. I mean, we're talking about no risk, high reward investments here. You can get it by using those links below in the description or pinned comment section. And without further ado, let's get right back into the video. So now we are going to be talking about the risk to reward of investing in Ipof right now. And to be quite honest with you guys, there is very, very minimal risk. This is the price action of IPOF right here. As you guys can see, it's gotten to a low of about $9.77, and it is very unlikely that it will go below this $9.77 point, because when you're investing in a special purpose acquisition company as a shareholder, you have the right to vote that you redeem the net asset value of that company. So if the stock price drops below like $9.70 per share per se, you can actually vote to de-SPAC and redeem that net asset value, which would create an arbitrage opportunity. So this is why SPACs almost never go below their net asset value until they de-SPAC. So currently sitting at $10.05, this would imply that there's only about a 2.7% downside risk if it goes back to net asset value. That's an extremely low risk if you're buying shares. Furthermore, there is extremely low implied volatility in the options market currently. If we're looking at the March 18th expiration, which is about a month out from here, it's only a 10% implied volatility for the at the money strike price of $10. That's extremely cheap. It does not have to move much in order to make money, and you can also make money from this implied volatility increasing, hence why on Friday it went up 183%. And it's still super low implied volatility. I mean, it only costs 17 cents for this $10 contract expiring in March. That would mean it only takes a 12-cent increase to break even on this contract. And as you guys can see, it moved up 6 cents in after hours on Friday. Here's what the potential risk to reward is looking like if you do buy that contract. As you guys can see, your maximum loss is only going to be $17 for this contract. But if this stock goes up even 10% from its current value, you're sitting on a 488% gain. If it goes up to even $13 per share, you're sitting at a 1,665% gain on those contracts. You can also see right here that the call option activity has been absolutely insane over the past month. We had a few big bets over here on 1/24, so January 24th, a lot of big bets over here on February 16th, so just a few days ago. These are all coming in at major premiums. $110,000 right here, $45,000 right here, $30,000 right here, $18,000 right here, $29,000 right here, and $18,000 right here. Absolutely amazing bullish bets right there. Out of the trades that we've seen in the past month, it's about 89% bullish. Again, absolutely remarkable. We can also see that call option volume did spike up on February 18th, this past Friday. It's done that a few different times in the past, coming right back down. So I definitely would wait to buy these options on a lower volume day. Perhaps the contracts will get a bit IV crushed even more. I mean, they already are very cheap IV, but they may get even more IV crushed, and that could lead you to getting a better deal on the contracts, getting way more gains. So I'm just going to put it out there that chasing this high volume definitely does add some risk. Looking at the open interest of call options, which shows us the amount of contracts that are open currently, you guys can see that about 86,000 are here at the $10 strike price for March 18th. There's another 64,000 right here at the $10 strike price on April 14th. There are a few other strike prices that do have a lot of value, the 12.5 for April, as well as the 12.5 and 11 for March 18th. All of the other expiration dates that we're seeing down here, those don't have nearly as much open interest as the April and March contracts. This leads me to believe that we may get some merger news soon before April. However, obviously that's speculation and not financial advice. At the end of the day, no one knows what may happen and we can just speculate. However, at $10 per share, you're really not seeing too much downside risk. We already went over it. It's only going to be about 3% downside from current values. and the options are super cheap. So we're talking about something that has extremely low risk and extremely high reward if the speculation does turn into reality. Also, in the past, when I've dealt with similar things, even if the speculation does not turn into reality, just the fact that there is a rumor allows the stock to rally off of it. I remember there was a rumor back in like October or September or something that Shiba Inu was going to be listed on Robinhood. Shiba Inu went on a 3x from the current prices, and it never got listed on Robinhood. So a lot of the times when there is a significant rumor, a stock, cryptocurrency, or asset can just rally off of it anyways. And in terms of IPOF, there really is just not too much downside risk. So in my eyes, this is a very good opportunity in an otherwise kind of terrible market. Anyways, that's all I got, guys. Drop a like on the video if you all enjoyed. Subscribe to the channel if you are new. Check out Moomoo, the sponsor of today's video, if you want up to $7,000 in free stock using the second link in the description or first link in the pinned comment section. And if you want all of my trade alerts, exclusive due diligence, as well as a private Discord where you can talk to me and other VIP members, you can check out the first link below in the description to check out that. Anyways, guys, that's about it for me. I'll be seeing you guys next time. See ya.